Hello guys, this is me, Abdi Husni FX Mentor. In this video, I'm going to explain and want to show you exactly some information towards this course, these videos that I'm going to show you a simple strategy of scalping volatility indices and bull market crashes. So this is me, Abdi Husni FX Mentor, and you will have probably found your way to this trading guide and course from myself, and maybe for me to you. I'm happy you are watching right now, and I'm doing these videos or these tutorials, these educational videos, because I feel that scalping is a such powerful approach to trading the markets, but it's not widely known. Remember, not only did a scalping allow me to recover all my losses since I started trading and lost a lot of money, it also made me a consistently profitable trader. I'm now a profitable trader. And as you know that volatility and boom and crashes, they need a strategy, and the strategy you need will be these tutorials, guys. And these videos, these tutorials are my way of giving back for all the fortunate things that I might have and that have also happened to me since I adopted the scalping approach. So including recovering from 50% drawdown and much more than that. These videos exactly lays the foundation to scalping, and is also a guide to get you started to being a scalper. It is not a system, and definitely not a get rich quick scheme. It will be, however, let you understand what scalping is all about. Don't worry, I have given you trading strategies as well, just to get you started. And if it can help you just to, like, one person to get closer to being a consistently profitable trader, then the month I might have spent writing or preparing many contents of trading guidelines, or trading gas, and it will have been a total worth for every new trader, and this will be very helpful, guys. uh, exactly, to all my subscribers, followers on Telegram and YouTube, and my friends out here in Telegram groups or YouTubes, and also my older friends, new friends, I might say thank you for all of you, the gift and the support you always give me. I only hope this trading course or trading strategy can be exactly uh, 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 exactly repayable or repayable for you all the time, and attention you have given me here is to you, and I'm continually successing, and we success together all. So firstly, what is a scalping? This is what we want to understand. And scalping is exactly a trading style specializing in taking profits on a small price change, generally soon after a trade has been entered, and also has become a profitable. It requires a trader to have a strict exit strategy, because one large loss could eliminate the many small gains that trader has worked to obtain. Having the right tools such as a live feed, a direct exercise broker, and also the stamina to place many trades is required for this strategy to be a successful, guys. And for you, if you are in synthetic indices or you trading in boom and crashes, I really request you, you need some guidelines. You can ask me, you can ask me any question you wanted to ask me in my group. So we have to ask, why are we scalping? And this is very important. And scalp is like always to try and scalp between 5 to 10 pips from each trade, and they make it. Also, we know when you know you can make it, and to repeat this process over and over through all the day can make you money. And using high leverage and making trades with just a few pips for profit at a time can add up time to time, and you can gradually grow your money, especially if your trades are profitable and can be repeated many times over the course of the day. Remember, with one stand lot which you use in currency pairs, the leverage or the average value of a pip is about $10. So for every 5 pips of a profit you made, the trade can make $50 at the time. Then 10 times a day, this would equal 500. So it's about the money you have first initially, the money you deposit. So if you are with me and you want to follow me for the next videos, I recommend you brokers like FX Primus. I also recommend you Deriv Broker, IC Markets for currencies. So if you wanted to success, click the links below to join these brokers. So how to set up your charts? You also need to go somewhere, like you come on your chart, right click and then click properties, then choose any color of your choice, and you have to always select to show period separates, which is very important. And then these lines will come up, and this is very important. When you done these lines, then we will have that between each and every line you see here is a 1 day. For example, this line and this line, this is the current day, so this is the low of today and this is the high of today. You can see that market is exactly struggling buying. It was buying all day. As you can see, it was selling and then it started buying. So this is another day, this was another day. So as you can see that we are on what is today? Today is like Thursday, November 10. So it's Thursday. This was Wednesday yesterday. This was yesterday before yesterday. So what I mean is between these two lines is a 1 day. So so market will get in tomorrow candle. So tomorrow will be between here and the next upcoming line, which will be horizontal. So that is what I mean firstly. And what do we use for these period separates, which we have this like this and this? It's very important. So we can always use it for hide and show the periods and date and time of here. As you can see, this date and time, you can see that 9 November. So 9 November is just getting out and we getting in, and 10 and 10 11, then that's what's gonna happen. So we need to understand also the scale of these interval lines, which are exactly horizontal and vertical. So this is the horizontal and this is the vertical, but we cannot see because this time is explaining also what is this between this and this. So what I want to tell you is we have to also have a corresponding with the large period, I mean the time frames. So in a border we have to know. So the daily separates will be drawn for charities with periods of 1 minute to 1 hour. So that is the daily. For example, this is the 1 hour. If I call 4 hour, what's gonna happen? The separate that can go 4 hour and weekly, this is for weekly. So weekly it can goes for 4 hours. So this is 1 week. So this and this, it's 1 week. So if I go the daily, I will see these things. So when I go for the daily, I will go for months. So if you see that this and this, it's a month. So from here, this was the month, and this was the month high. So previous month's low was here, previous month's low was here, and previous month's high was here. So this, when I go daily, I will have month. So if I show you if what I mean, for example, so I'm in 15 minutes. So this is the low of the day, okay? This is the low of the day. This is the high of the day, the current high. So the market was buying all day today. So this, from 1 minute till 1 hour, it shows you the day. So from the 4 hour till the day, so 4 hour, when I click 4 hour, what will I see? It's a week. So means like when I click for the week, this is the low of the week, okay? So this is 1 week. From here till here till here, it's 1 week. So from this line to this line, it's 1 week. When I click 4 hour, it's a 1 week. So when I click the daily, it's a month. For example, when I click the daily, so it's a month, means like this was the low of previous month. So the market reached previous month this time, and you can see that here it's the high of the previous month. So this is the previous month high, and this is previous month low. So that's what I mean. So when we go for the week, it's a year, okay? When I go for the week, it's a year, means like, so you can see that market was going down from here, okay, from here till here, and it means that here we have the year, okay? This is the year, and this is the year high, and this is the year low, okay? 1 year high, 1 year low. This is the current year which we are in, 2022. So after the coming months, the market is going to come out of this area and then open for the new year. That is what I mean. I might think you have understood. For the week, we're gonna go in for months, and then that's it. So so week shows the months also. I hope you've understood and learned how you can exactly change. So the color, you can change the color of your choice. So you can see my colors. This is the color of my choice. You can have your own colors, but you must always remember we need these separate lines in order to know the high and the low, and which day we are in. So we focus on also the aspects of this scalping strategy is about the high and lows, and also the previous high and the previous lows. Let me tell you, I'm just mean daily highs and daily lows, and also we need previous daily high and previous daily low. What I mean is, like, we are focusing on the high of today, which is here, you can see, because this and this, it's the high. So this is the high of today, and this is the low of today. We also need to focus on previous days high and low. Like here, you can see this is this, if this is the is if this is today, so previous high, previous day, we can see that previous day low was here, okay, and high was here. But we had yesterday's, before yesterday, the market was low, okay, but what we're focusing on is this high. Now we're focusing on this high, okay, and we also need this low, and we also focus on this and this as a structure. So these are what we need. We don't need nothing else in this strategy. We don't need to focus on another thing, because these are the zones which we need to trade in scalp in this market. But when we do this at 15 minutes, you can also check 1 hour if it is okay with all price action, with all price levels, and then go back any time frame you want. So we always like to do these things, guys, and focus on. So time frames we use are 15 minutes and 1 hour. As you can see, 15 minutes and 1 hour, 15 minutes and 1 hour. Our entries can be like 5 minutes. It's okay, we need it. So I want to tell you guys, like, the rules which we need to do. So any time frame you are in right now is switch to 15 minutes or 1 hour. If you are watching this video, any time frame you are in is switch it to 15 minutes or 1 hour. That is number one, rule one. Also, take note of the previous daily high and also the previous daily low, or the current high and the current low. For example, if I go 15 minutes, what I will take a note is the previous high, this was the previous high, and the previous low, this was the previous low, and also the current low, which is this one, and the current high, which is this one. That is what you should always focus on. A trade also on the previous high, on the previous low, we are going to accompany it by the structure, which means like we are going to find the support and resistance as a supply and demand for a double confirmation. I hope you have understood it. Secondly, what are we going to do at 15 minutes time frame? So on this time frame, we only focus on the recently highs and also the recent lows. Remember, we do not consider the previous day's highs and lows when we are in 15 minutes. We always focus on the recently high and recently lows. Okay, number one, let us find some rules of the buy or some rules for the sell. Okay, let me show you guys for rule of the buy. If I want to buy, like here, we had a good rule for the buy. So if I drag, as you can see here, we have low, right? This we call initial low, guys. This is initial low. So this is initial low, guys. So this is initial low. Okay, this is initial low. So when we get the initial low, when price forms the first leg as initial low, what are we gonna do is, like, we must weigh three factors. So three factors. So these three factors are very important. So let me call this is factor 1. Okay, this is factor 1. So when we get this factor as initial low, so what we need, so this is what we call factor 2, which is retracement. So this is factor 2. This is factor 2, which is very important. So factor 2, what is factor 2? It's retracement, guys. It's retracement. So factor 2, it's a retracement, and we need these three factors. Okay, it's a retracement. So when we get factor 2 as retracement, what do we need as the end? We need to get what we call, before we consider buying, the price to move down before where it has started as initial low, because this is where the market started for buying. It must come back, it must move down. The retracement factor must go down, and in order to reach the low, so this can be fairly low, a low fillet, it can reach, it can come the initial low, which is like this area or somewhere above. Okay, but when price comes back somewhere there, you can have your entry here. This is the factor where you can have the failed low, which is factor 3. So when these three factors are ready, then you have your buy here. That is the rule of buying. So the most the most reliable low is when the low is below the previous daily low. That is exactly reliable. What I mean is when you see that, for example, this is a yesterday's low, right? So which low is reliable, this one and this one, for a buy? This buy, you can see market came back. So when tomorrow candle opens, if the market is selling, or if the market is selling, wait the market to break below the previous day's low. Like here, you can see market has broken this low. As you can see, market has broken that zone. Okay, it has broken down. So this low is the exactly a reliable and confidence one. This is where you can have a full of confidence for a buy. And then when you get this low, there is where you can have trust. So I hope you've understood exactly how you might have exactly the buy. Let me tell you the rule of selling. So in 15 minutes, I've told you that this time frame can only be focused on the recent highs and recent lows, and we cannot consider the previous day's highs or lows. This is what we're gonna do. Like, we always focus on this and this only. Okay, what I'm gonna see is, what I see is like this market is exactly going to sell it, but when we always need these things as a rule of selling or rule of buying. So what we want is the market should give you, or should give us, three factors. As I told you, we need the impulsive, which was like this one. The impulsive, which was like this one, the market has aggressively aggressively was selling. This was the impulsive. So when we get the impulsive, we need exactly a retracement. After the retracement, we need the exactly the last factor, which is the mitigation. After the mitigation, after the retracement, mitigation comes and market buys. So right now, what do you see then? We have impulsive, right? So this is impulsive, same like the one which was the sell. Okay, so right now the market was buying. This is impulsive aggressive buy. So after the aggressive buy, this is factor 1, right? This is factor 1, and it has created what is called the initial high. Market has formed initial high, guys. Market has formed initial high. So after the initial high is formed, the market is to close this pullback, which is retracement. So the retracement is factor 2. So this retracement is factor 2, guys, and market will go back to that area. So when market goes back to that area, what is this? This is factor 2, and factor 2 is the retracement. Okay, okay, factor 2 is the retracement. So after the retracement, what are we just waiting for? That is our entry, right? We are waiting for the close and find for, after price comes back to the initial high, we are looking for our sell. That is what we exactly do for this strategy. I hope that you have learned and you need to practice this several times. So if we want exactly to go 1 hour, what shall we do then? 1 hour. Okay, for the 1 hour, for the 1 hour, let us try to take for buy or sales at 1 hour time frame. So on this time frame 1 hour, we focus on both the recently highs and also lows, and also the previous days highs and previous days low. We need both of them, not like the 15 minutes where we were focusing on the current high and the current low. So now we have to keep eyes on both the recently high and recent lows, and also the previous days high and previous days low. So what I'm gonna tell you is that let us now try to find an opportunity for a sell. Okay, the market should always give you three factors, and number one is impulsive, number two is retracement, and number number three is the high failure, which means the first return of the initial high or initial low. For now we are selling, we are waiting the next, the 30 factor as price is to come back the high failure, which I mean that the price is to bounce at the recently high, either on the currently high or maybe the previous day's high. It does not matter, whatever it may be. Let us go. Okay, now this market was selling. Let us learn the reason why this market was selling. Okay, number one, we need the impulsive, right? Impulsive is aggressive buy or aggressive sell. So the market was buying aggressively. So the first leg which we have here is the impulsive, okay, and market has created initial high. So so this is number one, and market created the initial high. So this high, what is this high? Is it the candle day's high? So it can be, let us call this was the candle day, no matter which high it is, but you can focus on both of them, and then you can see market has just to go down as retracement. Okay, the market has come back for retracement, and that is what is gonna happening as our second factor. Okay, this is our second factor, which is exactly a retracement. So retracement. So now you can see that the price is now from it the second factor. We need the last factor, which is exactly after the mitigation, which can be higher or equal to that area. So now that we need exactly the last leg, which is exactly the factor 3, and this factor 3 is exactly the bounce of this of the previous high. So price is retested or mitigated the previous high level, and this is where we always have our selling or opportunity of the entry. I hope you've understood and learned it also. So you have more examples on this video of how you can exactly buy and sell on initial high or initial lows. I might think that this will help you better, and this is exactly a basic way of entering the market. So this is where you when you wanted to sell. Let me also show you the buy, which I have shown you, and same like what I've told you. You can see the same like what I have been explaining at the 15 minutes, same on. So always focus on the opposite of what I've told you, and it's exactly takeable with that opposite. And I might say thank you for all of you for watching this video. And what I want to give you as a fact is, during the trading you may exactly face many problems, and you know that market is sometimes flexible. You must always apply a price action with what you wanted to do on the market, and I hope you better better trading session. And I'm happy, and I hope this video will help you better, and it will also be like a knowledgeable insight that turns you into the profitable trade you have been praying for all these years. Thank you and goodbye. Bye bye.